Hi everyone, welcome back to our channel. I'm Josh Tavares, investor and realtor with the XP Realty Brokerage. And today we're going to talk about what's on everyone's mind for Canadian real estate, and that's what's the future of Canadian real estate. And in today's video, we're going to dive deep into that. We're going to talk about what's currently taking place, what's going to change the landscape of real estate investing, as well as some of the predictions that I have and how it's going to change the landscape of real estate investing, not only now as we speak, but for many years to come. Before we dive into it, it's fair to say that the Canadian real estate market has been very resilient and a lot of things have happened and changed from the pandemic all the way to where we are now in 2023. We had interest rates being lower than 2% at one point. We have interest rates now that are near 5% from the Bank of Canada. And we've had many different things take place for having properties significantly get reduced because the interest rates that were taking place. We had properties during the pandemic going for a significant higher amount than they were than ever before, going within hours of being listed, and craziness that we've never seen in the market in history in Canadian real estate. It's safe to say that Canadian real estate has been very strong and is going to continue to stay strong for years to come, continuing on various factors. Number one, interest rates. As I listed earlier, the pandemic had brought interest rates to be at the lowest point in Canadian history, all the way up to now going up to near 5%, which is the highest it's been in quite some time, making a big impact on the overall market from the buyers, sellers, supply, and demand perspective. And now the reason that they continue to increase interest rates during that time period is to help curb inflation. As we know, inflation was heading near 13% on Canadian soil, making it very difficult for the cost of living for many Canadians as they're continuing to rise. But by increasing the interest rates, we would be able to curb and slow down inflation, making it easier for Canadians to be able to afford many of the necessities and help with their purchasing power. So essentially, yes, it has hurt some people who are in the financing perspective in terms of foreign mortgaging, credit cards, line of credits. However, it's helping with the cost of goods staying more at a attainable pace than opposed to being at an absurd rate of near 12 to 13%. Now, the Bank of Canada has stated that they're not afraid to raise interest rates if need be, if the inflation continues to go back and get out of place. However, I think the way things are going to be, we're going to see things continue to go back to they were, being more sustainable. And if anything, maybe in about a year's time or later on in the year, we might see interest rates drop closer to where they were prior to the pandemic. But of course, there has to be a massive amount of progression taking place in terms of cost of living, economic fundamentals taking place in the market. Based on a report from Royal LePage, they stated that 25% of the market was willing and open to purchasing brand new properties here in Canada, but also 60% had delayed the purchasing process of property due to higher interest rates. And of those who decided to hold off from purchasing, 26% say they would wait for the spring to go about purchasing again, and 36% was stating that they are open to purchasing a property in the near future after the springtime. Now, another trend that we're seeing in today's place in the Canadian real estate market is urbanization. As we know, urbanization has been something that's taken place in a lot of the major Canadian cities, such as Toronto, Vancouver, Montreal, Calgary, Edmonton, Winnipeg. It's taking place by, as we all know, a lot of these large developers are purchasing older industrial real estate and essentially building up towers. And as you can see with the Toronto skyline, Toronto has essentially become Canada's New York City in terms of its skyline and how much it's drastically changed over the last decade or so. Now, I will say that these municipalities such as Toronto, Vancouver, Montreal have become very popular based on cultural proponents, based on the hustling, bustling life culture, as well as the job opportunities that provides excellent opportunity compared to being out to further areas away from the urban cores. And because there's such a high demand to live in these urbanized areas, there is a low supply and a very high demand for rents for purchasing properties. Of course, in these areas all over the world, they tend to have the highest price tags. Now, here in Toronto, you're going to find houses above $1 million, multiple $1 million if you're going to be in more of the Toronto centralized core. We're looking between $3 to $5 million in certain areas. Sometimes you'll see between $1 and $3 million. It really depends on the area's specs and so on and so forth. But we're seeing rents being significantly higher. We're seeing vacancy rates dropping. We're seeing GDP continue to grow. We're seeing vacancy rates drop. We're seeing all the economic fundamentals that are working in an investor space to work and invest in these urban cores. And another positive perspective, not only with the high demand, we're seeing a high amount of appreciation. These properties have seen upwards to 30 to 50% increase over the last 10 years, which is substantial considering real estate before the last 10 years was essentially going up maybe 3 to 4%, going alongside with inflation. But ever since I would say 2012, we've seen a massive amount of appreciation. So anyone who has been able to get into the real estate market in the greater Toronto area or the greater hubs closer to these urban cores has seen an astronomical amount of appreciation and ROI on their investment. I think another important component as being a real estate investor is understanding your niche. If you want to be an investor who invests specifically into student rentals, you want to be close enough to the school, be close enough to amenities, and be able to have all the value needed for any types of students. Just like if you're going to invest into multi-generational housing, where you're going to have grandparents, parents, and even children live under the same roof, you need to have the right square footage. You need to be able to have the right infrastructure in terms of having the ability of these individuals to all live in the house in a cohesive unit, have enough bedrooms, bathrooms, and everything work out in its own favor, that you'll be able to cater these individuals and be able to get the top rent and get the right types of tenants. Because as we know as investors, it's very important to get the right tenants who pay on time in full every month, and of course have limiting the turnover rate of having tenants leaving your property. Another trend taking place is sustainability. Many different buyers, sellers, as well as renters are looking for properties that are sustainable in terms of energy efficiency. Is it best for the environment? Is it going to cut down on their costs? Because that's what they're looking for. It's going to help them in terms of their costs. It's going to be, of course, better for the environment. And of course, it's going to come with a higher price tag, but in the long run, you're going to be able to save on your expenses if you're a buyer, and you'll be able, as a seller, to be able to get more bang for your buck. Now, think of it this way. If you're an investor who is investing into a property that has solar panels and be able to save thousands of dollars every single year on your utility bills, that's going to be a huge benefit that you as an investor will be able to charge higher rents to your tenants or be able to sell your property at a premium. And personally, for us as real estate investors, one of the biggest things that we always look for is different ways that we can cut back expenses. If we can do renovations and be able to make it more efficient through electricity, through water intake, through gas, of course, we're going to go about doing so. If we can get new appliances that are going to be more efficient, right? If we're going to be able to install new fixtures, new plumbing fixtures like toilets that are more energy efficient, if we're able to have outlets and other types of light bulbs that are going to consume less electricity, and have, like I said, appliances that are going to use less electricity, as a whole, it's going to be better in the overall run. It's going to save you hundreds, if not thousands of dollars every single year, and it's going to help you have more ROI, more cash in your pocket. Now, being an investor and having a property with the LEEDs designation, which stands for Leadership in Energy and Environmental Design, you'll be able to attract a better demographic for rents. We're looking about more of an affluent renter who might not actually be in the property very much, probably travels a lot, has a very nice vehicle that's energy efficient, perhaps like a Tesla, and actually cares a lot about the environment and makes a very good income that'll be able to pay probably rent and even higher. Or if you're looking to sell your property, you'll be able with that designation to ask for a higher amount, perhaps tens of thousands, maybe over 100,000 or even more, because the designation that you have to prove it's certified under this realm, and that you can know that everything was done correctly when it came to engineering and designing and architecting this property as a whole. Now let's get into some of the predictions that I personally see in the near future in Canadian real estate, starting off with growth. As we all know, the Canadian real estate sector has done a really good job in terms of growth over the last 12 or so years, and I do continue to see that for the long term. Now, I noticed for the last short term, last couple of years, it hasn't looked as promising, but I think if we ride this down, you continue to hold your rental properties and continue to do what you've been doing with it, you're going to see your appreciation increase, you're going to see your mortgage pay down continue to increase, better rents, better ROI. That's going to lead to a much better lifestyle for you and your family, be able to duplicate and multiply your wealth without even having to do much work. Personally, I believe the Canadian real estate market is going to do really, really well. It's going to go back to closer it was prior to the pandemic, be a little bit more consistency, better gains. You're going to see better appreciation, more mortgage pay down, and continue to see better quality of tenants taking place, especially with the high amount of migration taking place. It's going to make it a lot easier to get more rents and be able to get a better clientele for your property. Now, as I said, we've got high mass migration. We have high demand, low supply. We also have massive amount of career opportunities taking place in Southern Ontario, as well as throughout Canada as a whole, that it makes it so much easier as an investor to see massive amount of returns, be able to duplicate your property, see great amounts of rent increases, and everything as a whole appreciation needed to be a successful real estate investor and have the type of investment egg through at least one or a couple of properties, that you'll be able to retire sooner in a better predicament than some of your colleagues who may be relying on the so-called pension. And then when it's all said and done, it's going to be very challenging, because once you retire, you're going to receive one income for a long period of time. And maybe when you retire, it'll be good income. But then let's say you outlive over 10 years, 15 years, 20 years, guess what? Your pension is going to be limited to the same amount usually that what it was when you first retired. And like I said, when you first retired, maybe it's decent enough to live on your own. But then as things continue to change and years go on, it's not going to be sustainable. Eventually, it won't even be enough to pay your rent if you decide to sell your home and kind of rent and go about that way. So something to consider, being an investor versus not being an investor. And also too, we're seeing a mass amount of the demographic that's aging. So there's a big opportunity there for investors who want to have housing or cater towards older individual living, who maybe want to live on their own and still somewhat capable, and have all the different accessibility points to make it easier for that demographic. And this demographic may actually have decent funds, and whatever they can afford, chances are their children might be able to co-sign or be able to provide some of the rent. I've heard of some of these instances where they actually have these older individuals, they want to live on their own, and they actually have children who have very high positions that they'll actually pay majority of the rent to make sure that their parents are taken care of, because they don't want them to go, for example, to an older folks home. So having a home that even caters to the older demographic is not a bad idea and a good investment strategy, especially if you have the investment capital to convert your home to be accessibility friendly for these older folks, because you can see a very good return on your investment. And with the cost of living being very expensive, as well as rising housing costs, it becomes very challenging for some of these older individuals to continue to keep the home they've had for the last 20 to 40 years, because property tax is increasing, everything is increasing as a whole, and they may not have the income they once had or have the purchasing power they had at one point to be able to sustain it. So sometimes it's better for them to sell their home and to rent, and essentially potentially have their children to be able to help supplement in terms of the rental, help provide them some additional funds so they can actually live through day to day. Remember, depending on your niche, you want to market accordingly to the individuals that you're catering to, and be very specific and think like how your demographic is going to think, or at least the individual who's going to position that person in there. So let's say, example, for multi-generational living, essentially you want to cater to someone who's maybe like the child who's going to live with their parent, who have their own little children. You want to cater to them so that maybe they're able to find this property, live in your property, rent, pay on time, and so on and so forth. You may not want to cater to the older individuals through social media, because they may not be inclined so much with social media as such. So you perhaps want to go towards the individuals that are more inclined, going to work in your favor, to get into your unit and be able to find your messaging through whether it's social media, whether it's direct mail, whether it's word of mouth, or any type of other mediums of marketing as a whole. Number two, another prediction that's going to impact the real estate Canadian market is technology. As time has gone by, as we know, technology has impacted all areas of life. And guess what? Real estate is no different. And as we know, real estate has been one of those industries that's actually kind of avoided change for a long period of time. Unlike the tech industry, it's done its very best to kind of stay in its own lane. Now, I will say, over time, things have changed. Back at one point, the real estate agents had all the information and they could hold it in their favor and sometimes mislead buyers and sellers and even renters to kind of go towards a property that may be bigger or better for their own paychecks. Where nowadays, it's actually changed. The consumer base, whether it's going to be buyers, sellers, or even renters, all have access to more information they've ever had before. So as a real estate representative, you can't just feed them incorrect information, because they'll be able to find that information online, find out what the properties are selling for, what they're renting for, square footage, utility costs, everything as a whole in that neighborhood, that property, that building. So they're able to get more information, more educated than ever before. Essentially, your job as a real estate agent, if you are working with potentially buyers and sellers at this point, is to be able to guide them through the process and give them the right information that they're able to make an informed decision and make the right decision for them. And also, tech as a whole has made it a lot easier for buyers and sellers to learn more about what's taking place in the market, to be able to book showings, to know more about properties, to know more about what's taking place in that community, where before information was kind of limited. So it makes it a lot easier, even from a perspective of signing leases, and even with APS, as an agreement of purchase and sale, you can all do that via digital now. You don't have to go into a real estate office and sign a lease or sign an agreement of purchase and sale. You can now do everything digitally, so it actually saves you from hopping in your car, going on the road, dealing with traffic, and anything that involves leaving your home to sign physical paperwork. You can do everything digitally now on the cloud, which is more efficient in a lot of ways than in history. And also, real estate investors now can essentially use analytics in their own favor to be able to benefit to see exactly what properties are going for, what's the best investment opportunities taking place, what's the ROI, what's the cap rates that makes the most sense for them in their portfolio. Where in the past, like I said, information was very limited. So you're essentially going with the words of a real estate agent or certain individuals in the real estate space. Now you'll be able to collect information independently on your own and make the right decision. That's the right informed decision that's going to make a big impact on your portfolio and your future. Another interesting component of technology that's also changed in the last decade of real estate is smart homes. With smart homes, you'll be able to control many components of your home through the click of the button on your phone. You have the ability to be on your phone at work and be able to see if there's someone, in your front yard, backyard, throughout the house. You'll be able to check the temperature in your home. You'll be able to see kind of what's on your fridge with the really, really smart fridges they have taking place. You'll be able to on and off your TV, your cable provider, or your streaming service. All kinds of things that you were never able to do before, you can kind of do with a touch of a button while you're not at home. Or things you can do at home. Let's say you're upstairs on the third floor and you're, working I work remotely. You can actually check on your phone while you're at home, let's say the temperature of the home or different components in your home. You can see your surveillance system, something that in the past that you didn't really have perhaps the luxury. So there's so many components. You can see the temperature and everything. So many things you have access to now that you physically had to go and do them, where now everything's kind of done for you in the smart home revolution. And with the increased popularity of Bitcoin and all these different cryptocurrencies, we have blockchain technology, which is essentially in the real estate space used to go about acquiring and transferring, ownership documentation, property tax, utilities, all kinds of documents in the most secure form way than we've ever really had before, and be able to transfer other forms of information through data and analytics that we've never been able to access before securely as we can right now. And as we know, there's a lot more breaches taking place. There's a lot of hacks going on. So it's really important to have the right fundamentals taking place. And I think blockchain helps with that. And with blockchain technology, we're essentially seeing individuals purchase real estate and be able to own fractional portions of the property instead of the typical corporation method of owning shares. They're owning actual digital shares of what that property is, but obviously through Bitcoin or different types of cryptocurrencies created to own real estate. We've actually had properties that have been purchased in cryptocurrency, such as Bitcoin, which is something that we thought we'd never see, and we're in a very interesting time to see that. And I think with all these blockchain information that's taking place and having the ability to fractionally own these properties, especially in a digital perspective, it gives us an edge as a real estate investor to use different forms of our cash. So let's say you're a real estate investor who's got a property. Let's say the cash flow is $1,000 a month. Now, $1,000 a month, you can't really go buy another house. It's of course too expensive. But with that cash flow, you can go about and purchasing and owning fractional reserve or fractional ownership of other types of properties through the form of tokenization, something that, like I said, we probably wouldn't have seen in the past. Very similar to, let's say, owning a REIT and owning, let's say, 500 shares of a REIT that's going to pay you monthly dividends. It'd be very similar, but instead of owning it through the typical corporate structure, you're going to essentially own it through the tokenization method of different websites that do provide this form of fractional reserve real estate investing online. There you have it. That's some of the trends and the predictions that I believe how the real estate market is going to take place for real estate investment in Canada. I truly believe that the growth is going to be continued to go really, really well. I think technology is going to be a massive perspective. I think understanding different niches and be able to cater to those niches is going to be substantially important for real estate investors, because you can't typically just go about purchasing any property and just hope it does well. Most properties will do well in the Canadian market, but being able to cater and be able to be up to date with what's taking place in the market and understand the best investing opportunities, understanding all the rules and the risk involved with investing in particular areas and different property types is going to be the difference between being a successful real estate investor and someone who regrets it as a whole. Thanks so much for watching, guys. I'm Josh Tavares, investor and realtor with eXp Realty Brokerage. Thanks so much. Have a good night.